Good morning, viewers. It's Friday morning, May 16, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Please mention your email in the comment section so that we can forward you the daily market wrap in your inbox at exactly 7 a.m. Eastern Time each weekday. The S&P 500 rose for a fourth straight day. Investors are hoping that trade tensions will ease and the US economy will prove resilient as the major indexes drifted sideways with little conviction in either direction for much of the day. The S&P 500 climbed 0.41% to end at 5,917. The Nasdaq declined 0.18% to 19,112, while the Dow Jones Industrial Average rose 0.65% or about 272 points to 42,323. The S&P 500 has more than recovered from a deep sell-off in April triggered by US President Donald Trump's global trade war as investors bet Washington will reach deals to roll back steep tariffs that economists worry will drive up consumer prices. The S&P 500 remains about 4% below its record high close on February 19 this year. Across the broader economy, data showed US retail sales growth slowed in April, while a separate report showed producer prices unexpectedly fell last month. That followed a relatively tame consumer price reading earlier in the week. The report showed retail sales grew just 0.1% in April, slowing from 1.7% a month earlier. Of the 11 S&P 500 sector indexes, 8 rose, led by utilities, and then followed by consumer staples. Cisco Systems jumped almost 5% after the networking company raised its annual forecast driven by artificial intelligence boom. United Health Group fell for eighth straight session, sliding 11% to $274, a 5-year low after it was reported that the Justice Department is investigating the company for possible criminal Medicare fraud. United Health denied it had been informed of a criminal probe by federal prosecutors. Investors shrugged off retail giant Walmart's plan to raise prices this month and early this summer in response to tariffs, a move that stands to ripple through the retail industry and the US economy. The company, one of the biggest and most cost focused US retailers, reported strong results on Thursday. Its price hikes would mean Walmart's passing some of the cost it incurs as tariffed merchandise hit stores' shelves. Wall Street shares fell 0.5%. The company declined to provide a second quarter profit outlook, joining other companies across sectors that have tweaked or pulled their forecasts, signaling that corporate America is hunkering down due to tariff-related uncertainty. Rival retailer Amazon, also heavily exposed to Trump's tariffs, dropped 2.4% and weighed on the Nasdaq. Meta Platforms Incorporated faced losses at big techs on a news report that it was delaying the rollout of a flagship AI model. And in late hours, Applied Materials Incorporated gave a tepid forecast. Speaking at an event in Qatar, President Trump indicated the US was close to a deal in which Tehran would drop its nuclear weapon ambitions. Such an agreement could, in theory, lead to higher Iranian crude exports, which are under strict US sanctions. US crude futures fell 2.4%. At the same event, he turned his sights on India, which he called one of the highest tariff nations in the world. He claimed New Delhi has offered the US a deal whereby basically India was willing to literally charge no tariff to the US. He also asked Apple's Incorporated Tim Cook to stop building plants in India to make devices for the US, pushing the iPhone maker to add domestic production as it pivots away from China. However, according to reports, Apple is having nothing of this as they are continuing with their plans to ramp up significantly production of iPhone 17 Pro model in India. In Thursday's session, 10-year Treasury yields ticked down after rising 5 days through Wednesday. The yield on the benchmark 10-year declined to 4.454%. Spot gold rose 1.7% to $3,232 an ounce. West Texas Intermediate crude fell 2.1% to $61.80 a barrel. My take: stock markets are emotional, and consumers are slowing down and stretched. While inflation is a risk, the type of inflation after COVID isn't on the radar anymore, as today's consumers certainly aren't willing to pay inflated prices, which means companies will have to absorb that. In general, companies today lack the pricing power to raise prices to a point that would trigger post pandemic levels of inflation, which would otherwise strain the economy. Federal Reserve Chair Jerome Powell warned that the world could be entering an era of more volatile inflation with more frequent and potentially more persistent supply shocks, a difficult challenge for the economy and for central banks. The prospect of more trade deal announcement is keeping some investors bullish on further market advances. It is still too early to say the worst is behind, but with potential deals about to be announced, the expectation is that the markets will continue to push higher. Stock markets are emotional. They are sensitive to even mild tremors, let alone massive shifts in tectonic plates. While the sentiments are still upbeat, all is well for the market. But beware, the customer's fatigue is starting to manifest. And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. I will see you now on Monday morning. Have a great weekend. In the meantime, happy investing, stay inspired, and remember, it is all about money.